We have a very, very important podcast today. You might recognize a recurring guest, but he's not just a recurring guest anymore. He is the newest member of the Lone Star team. There's a lot to unpack. I have a Diet Mountain Dew in my hand. We're at Best Ever, as some say, the granddaddy of them all for syndication conferences. But this is a very important episode. And there's a lot to unpack here. So you two gentlemen iron this all out. So I'm kind of letting you guys take it away, and I'm going to sit here in the middle and just enjoy the show a little bit and chime in where I see necessary. Rob and Sam, how the heck did this happen?
Sure, yeah, we'd love to tell the story. So first off, just to give the announcement, Lone Star Capital has acquired and merged with Sunset Capital, which is, of course, Sam Morris's firm, CEO. So we're super excited as part of the acquisition for Sam to be joining as a partner at Lone Star Capital. So that's really the formal big news, but then how it came to be, I think, is a much more organic and cool story. So I'll just kind of maybe tell a part of it. I'll let you tell a part of it. So as many of you listening know, or maybe don't know, Sam has been a big partner with Lone Star over the last year or so, and we've gotten to know each other through doing deals, which I've said this probably a million times on this podcast and other podcasts. One of the advantages of the real estate industry is how collaborative it is and how you can kind of date before you get married. All right, so you can do a deal together, and it doesn't mean that you have to do deals for life. And so we've done 4 deals together, and we've obviously had a good experience getting to know each other on both sides. And then over a month ago, Sam picked up the phone, called me, and kind of gave this proposal to merge and join forces. And we, of course, had a lot of conversations, put a lot of thought into it, and we made it all work. So we'd love to hear your side of the story.
Yeah, that's one side of the coin. Is he telling the truth?
Yeah, I mean,
is he a big liar?
No, that's definitely for real. I mean, one of the great things about getting to do it from my side too was you guys aren't the only ones I ever dated, right? So I got to see a lot of different people that were out there and what they did, and really from a cultural fit, an investment thesis fit, and just having an understanding of where we're all going for the future. It was one of those things that was very natural and very easy to do, in my opinion. And so, yes, that's correct.
Yeah.
So a big question that we've been getting while we've been here, we're in our meeting room here, hosting meetings in Salt Lake City with a bunch of our partners.
The exclusive meeting room of Lone Star Capital.
Yes, the exclusive meeting room. A lot of people asking, well, what's in it kind of for both sides, and what's Sam's background? Why'd you guys want to bring him on? Of course,
what does he do for the firm?
Of course, everyone's jealous because they wish they could have been a part of this team. But
yes.
Why did we pick Sam, and why did Sam pick us?
So not only a part of the team, but this isn't your typical free agency signing here.
For sure. So it's very special, very unique opportunity. So can you share, just for people who don't know you, your background, and then how that connects so well with Lone Star?
Yeah, so my story begins a lot longer before you guys were born, kind of thing. But I'm an ex-corporate banker, so I started in the banking world, right, and learning how to underwrite deals, right. That's really where I got my start doing real estate. And so I started the banking in 2001, so a few years ago, obviously. And just doing the underwriting side of the business, right? And then getting that transition into the lending side of the business, which is also just a whole nother world from that aspect. And so from there, did a lot of different real estate deals. I started investing in deals myself. So back in 2007 is really where I started investing in like larger commercial multifamily deals. And getting just the basis of just all the deals that are out there, how things work from every angle too, and really learning the business. And in 2018, sold my last bank that I was at, and went into real estate full time. And so it's been a great run up to this point, and I'm really excited for the future going forward with all the things that we have in store at Lone Star.
That's wonderful. So not to break my arm patting my back or anything like that, but would you mind sharing with us and for the listeners what attracted you specifically? I know you mentioned culture, you mentioned investment thesis fit and stuff like that, but like you mentioned, you dated a lot, you're very well known in the industry, so what attracted you specifically?
Yeah, a large portion of it is the human side, the human capital side for that standpoint, right? And having all the processes and the procedures that are in place, right, to really enable a company to scale and to grow, right? With where we were at Sunset Capital, it was going to be one of those things that was going to be a limiting factor, right? And it was something that, I was going to have to continue, chasing my tail continually, right? And the time, effort, and capital effort that was going to be needed for that, it really made sense for us to pair up with somebody. And so when we were talking to multiple groups about this, it was it was really simple for me. Like, who is it that's going to make the most amount of sense for us to do something with, right? And who is that group? And really, you go back to all the relationships you have and going, all right, well, great. If there is who is the next best player that's out there? Who is that person that's going to be taking it to the next level in the market that we're currently in? And who looks like they're going to be there for the long haul? To me, it was very obvious of who that was and why we wanted to be, part of the Lone Star community.
Yeah, I mean, it's a really big compliment. And Sam is, as you mentioned, very well known, but he had options in the marketplace. He could have gone really anywhere you wanted to go. You had an amazing career, but for you to kind of choose us is a really big compliment to the systems and machine that you built. So, you mentioned some cultural stuff, alignment and whatnot. Another benefit that we haven't actually mentioned here is where Sam's from and where he lives. So for those who don't know, and this is a big theme when you look at groups you're talking with, is, hey, do you have boots on the ground? Where does this person live? So you mentioned the word organic, but I honestly think we can't state that enough, how organic of a fit Sam will be into our processes. Also now, if a partner wants to tour one of our assets, I don't have to fly to Houston. So lucky me, right? But your experience in Houston, I think, is super valuable. So for everyone who, I guess, could you explain to everyone kind of your background in the Houston market? You mentioned banking, but operating, investing.
Yeah.
I mean, you bought your first house not too far from our first acquisition or second acquisition that we acquired in 2024, which is Court and Copperleaf, now known as Preserve at Copperleaf. So.
Yeah, I mean, so Houston's a pretty big city, right?
Little known fact.
I mean, Texas is a big state, but Houston is being the largest city in the state, 625 square miles. I mean, it is a big, big city. And you're not going to learn that city in a year. You're not going to learn that city probably in 10 years. It's just there's that much that goes on with it. And one of the benefits of having been a banker in that particular city is every deal that was done. It's a great thing about sitting on a loan committee and things like that, because you really get to see what goes on, where it happens. You get to see what happens in that city from not just a financial perspective, but where growth is coming from, where it's going, and where areas are being regentrified, things of that nature. And so it's been great to be a part of that ecosystem for as long as I have. But one of the things it does is when we're doing site selection or we're looking at deals, there's very much a right side of the tracks, wrong side of the tracks. There's very much submarkets within the submarket itself, and understanding, those areas, it's actually been very helpful from an investment perspective, and it's something that I'm hoping to add value to Lone Star with. Yeah,
so it's not just the capital raising side of things, because I mean, how much, I guess, if you mind sharing, how much have you raised the last couple of years?
Yeah, I mean, at Sunset we've raised about $27 million in the last 2 years.
So last I checked, that's some firepower to do that in a very much so a changing market. So we get the capital raising side of things, but another thing that's really cool is all the relationships you have with fund managers and other people that, are kind of people that we've raised from, that we've been kind of attracting. Obviously, you were one of those individuals. I remember we first met at one of the greatest establishments in all of Texas, which is the Taste of Texas in Houston. One of my favorite places to wine and dine and entertain investors who come to town. So not only do you have the capital raising side, but just to really harp once more and double click on your skill set, because I've said this before, I think in the last podcast, but you truly are a Renaissance man. You've got the information with the banking side of things. You can see it from the debt perspective, but also operating, which, I mean, right now, those who aren't operating are losing their deals and are losing money. And I remember talking to Nate Lowy about this. He's like, it's really the last 10 to 15% of the operating. That push there determines getting to your 15 IRR plus, or maybe not making money at all, and not hitting your promote there, which obviously all of our fund managers and kind of sponsors look at, right, for the back end fees, which means that you investors are doing well. But property management, asset management, can you speak to some of your experience to that?
Yeah, I mean, well, asset management's one thing, right? So I've built asset management teams before, and we've asset managed, several hundreds of millions of dollars of property, but acquisitions and dispositions too. I mean, that's a separate skill set as well. And so really, the three main skill sets that I'd say I really bring to the table: the investor relations side, as you mentioned, but the asset management side for sure. And that's really the execution of the business plan and understanding the financials and understanding really the quantitative side of the business. And then the acquisitions and disposition side, I mean, it's another skill set that's in addition to those.
You know what's going through my mind right now, by the way, is all those times I've been asked in investor calls, hey, has a founder or a partner of the firm been through a market cycle? Sam, have you been through a market cycle?
I have.
Okay.
I have. Yeah.
Does COVID count as a market cycle?
You're right. Yeah.
I mean, hey, it was very different, right?
Kinda.
It kind of does. I mean, there was definitely unique aspect to that. You think your lucky stars, no pun intended, that you were in the state of Texas at that time frame too, as an essential business and the things that we had to do. There was definitely some operational challenges associated with that, and things that you could and couldn't do. Running your properties, right? There was definitely challenges, associated with that. But that's another life cycle of the business, right? It's almost like almost anything else, right? You have to have gone through a fire, you have to have gone through a hurricane. There's definitely things that happen at the property level that you just have to be doing it long enough to have gone and experienced those time frames throughout the life cycle of a property.
And you've mentioned this a few times to me that right now feels like 2010 to you.
It really does. Yeah, it really does. I mean, during that time frame, it was kind of a little scary to buy in some aspects, right? Because you're sitting there going, "Ooh, man, with what we've just gone through, is this the right time?" Things like that. But you fast forward to 2012, 2013, and we were sitting there going, "Oh my gosh, why didn't we buy every single thing we could buy at that time?" Because we were getting it at such an amazing basis. We would have just made all kinds of money if we were able to do that. And it really does kind of have that similar feeling right now.
So what are the flavors and similarities and kind of the smells and scents that give you that feeling and recollection of 2010 to 2025?
Yeah, well, I mean, we went through a financial crisis, which is a little bit different than what we've just gone through. I mean, it definitely was a different aspect of the market, but there was a lot of depression at that time. Not just the financial market, but you could see, we have more inflationary type things that have occurred. We really didn't have that at that time, but it was just an overall sentiment, from an investment perspective, that people were really concerned and worried at that time frame, and those that took action were the ones who typically won.
I would think this is a really good example of what's going on. We're at Best Ever Conference, and there's actually this year in 2025 fewer attendees than the year before, which is unusual because typically things just continue to grow every year. More attendees, bigger speakers, bigger venue, but this year is a shrinking, and so it's kind of emblematic, I think, of the cycle. And I can't think of any better signal of opportunity. Not saying that this is exactly happening right now, but if someone kind of walked into this room from the conference and they said, "Multifamily, why are you investing in that? That's a bad investment. You're going to lose money." Like when
so many people are getting capital called, and
Right.
There's properties foreclosing. You don't want to invest.
Yeah,
in
why
that.
would you do that, right? Like that investor sentiment would be a good marking of the cycle and the opportunity.
Sure, yeah. And I mean, and the flip side of that is you go back to, say, 21 or 22, and I got into an Uber to drive to the airport or whatever, and the Uber driver's telling me how amazing it is to be investing into real estate right now. And that's when you're
Market
like,
tells.
yeah, I mean, there's nothing really overly scientific about that, but when your Uber driver's telling you really should be investing into something, you got to question some of it, right?
So I want to go back to the merger, and I want to specifically talk about your investors and talk to them.
Yeah.
Because I know you have spent some time talking to your major investors,
Absolutely.
letting them know about the change and giving them the update. So how does this transition benefit your existing investors that are now joining the Lone Star team?
Yeah, and it's a great question, and one that's actually fairly simple and easy to answer, because what it does is the availability of, you talk about Craig and Dasha and all the other support staff that we're actually going to be able to bring to them in the deals that we're doing is something that's going to be different, right, than what they've had before. Not only that, the deals are a little bit larger. We have more people that we're able to feed to it. When I talk about the human capital side of it at the beginning, I mean, there's a lot more support associated with their investments, and why it's still a great deal, why I'm still an investor with you guys, right, and why I would still put my money in the deals. It's going to be one of those things I think that is actually extremely beneficial for them on an ongoing basis for their multifamily assets.
Yeah, that's huge. I mean, we always are looking for a win-win-win, right? And like Craig said, an organic fit is exactly, how do you create a win-win-win?
And it's super interesting. You mentioned a great theme to talk about, which is culture. Culture is very valuable. I mean, I'm kind of on an island. I say this to you. I've probably said on the show, but my coworkers are just as much the capital raisers as really it is the New York corporate office team. It's a little known fact that I'm a remote employee. We'll have two kind of remote-ish employees, boots on the ground in our markets, which are, of course, Phoenix and Houston and the Texas market, right? But we take very seriously who kind of comes in, and we weren't looking for anyone. Like, we weren't looking for a capital raiser. We weren't looking for someone, like I told Rob the whole time, like, I know how lean we can run these things. Like, I've got the bandwidth. Like, I'll make some more money and make some more calls, and I'll dive deep. And if I got to work 60-hour weeks, I'm more than cool to do that. Like, let's go, party on. Like, let's make this happen. And then sometimes there's just market forces that, bring you together. The stars, the lone stars, more than just one star obviously aligned here to bring Sam into our life here, which is just super, super unique. And, these opportunities don't happen often, but when they happen, you move quickly. And I think you guys both moved pretty quickly once we realized that this was a legitimate opportunity. On your end, just so maybe your investors know, I mean, were you thinking about this for some time? Was this something that just kind of happened overnight?
No, this has been something that had been talked about for probably about 18 months. So I was approached even before this, obviously, and it was something that I really didn't anticipate entertaining up until just some my part of life where I'm at, right, and the opportunity that it's going to enable me to really just do the things that I do really well, right, and not have to worry about a lot of the other things associated with it, while still providing the best opportunities for my investors, because that was really important to me, was making sure the investors were taken care of, right? I want to know that the investors are still going to be getting the best deals possible and getting the best support associated with that. And so that was a big aspect for what I was looking for, right? But then the other aspect of it was, hey, you know what? I really can't do everything great, right? And so if I was able to focus my attention on the few things that I do great, it would be that much better for the investors and for the company that I was a part of.
Yeah, and I think one huge theme we need to hit on here is life is about service and investing. It's about being a fiduciary and service to your investors. And I think one theme that I'm hearing you kind of saying, and now kind of more formally say it, is just the service that you can provide to your investors now will likely be, I think, as you said, now they're only wearing a couple of hats, really 3 hats as we mentioned, will be a lot higher, I think. Is that a fair assessment to say?
Well, and there's additional support associated with it too, right? So look, I mean, it's no secret, there's really just a few things that you got to do when an investor comes into the ecosystem, right? And when they actually come and join you in a deal and partner with you in a deal, there's expectations that every investor should have. There's expectations that the sponsor should have of that investor. And really it's the deliverables, making sure that it's not that hard. Get the deliverables on time, right? Answer questions that they may have and make sure that they feel valued as a partner because they are a partner in the deals. And being able to do that consistently, accurately, and efficiently is of utmost importance to me. And knowing that we're part of the Lone Star ecosystem, and those are things that we focus on and do really well. It was an easy decision to marry together.
Yeah.
So speaking of the Lone Star ecosystem, I just want to peel back the curtain for listeners a little bit and just share how we plan to operate together and the kind of the culture of the firm, because something that I believe in is team incentives, team compensation rather than individual compensation. And so it can be a little bit controversial because both work, but at our firm moving forward, it's not like you, Sam, have your own investors and then they stay isolated and, oh, well, those are Sam's investors, we have to treat them differently. No, we're integrating everything together. So if Craig or Dasha can be of service to your investors, wonderful. If you can jump on a call with Craig and help talk to a new potential fund manager, or if you can mentor a new partner of ours.
If I can borrow some of his gray hairs, that'd be perfect.
Yeah. Exactly. So
or maybe leverage them.
I earned all of these.
I'm not going to borrow them. I'm going to leverage them. Yeah.
Yeah. So that's, I think, just a unique thing because I think it's a very thoughtful way we go about it, and perhaps maybe slightly unique to Lone Star, but it's just the way that we want to operate.
And I really want to talk about what this means holistically for you. the potential capital raising partners and our investors. Rob and I have been talking about this theme for some time, which is the theme of how do we raise as much investors from our investors, not institutionals, not third-party, capital providers, capital allocators, we call it in our world and such. So what a, typical LP investor is called is a retail investors, for those who don't know. So just to peel back, the layer there, if you will. So our goal is to ideally raise the entire capital stack from our own investors, which is, could be a dentist, could be a doctor, so on and so forth, a tech person, engineers, right? So that's kind of how we want to raise, but that will take a very long time to get there, of course. It'd be very impressive if we could raise a $20 million capital stack through that entire medium. At some point, I think we can get there, but it's going to take some time. But what Sam coming on is going to mean is us raising probably $8 to $10 million consistently for each deal that we do moving forward of our own investor capital. So let's say if we buy a deal that's a $50 million deal, let's just say that the capital stack will be somewhere between $16 to $20 million. Well, with Sam's firepower along with ours, basically half of that dollar amount is raised, which is awesome of our kind of contribution to the deal. Of course, we will co-invest into that opportunity, but then we've got those capital allocators that will come into the capital stack that will really help our capital raising endeavors. So that's something that is super exciting to us. That with Sam coming here, that'll get closer to our goal. And the ultimate goal with having more retail dollars in our deals is just being able to buy better quality deals. And the other theme of Sam coming on board is we can now probably buy higher quality deals because we have the ability to maybe do deals that are slightly less risky, that maybe have a little less of a return juice profile, call it a deal that has a 13 to 16% IRR, not that 16 to 20% range. Those 16 to 20% range IRR projected deals, which are of course just projections, typically have potentially a riskier business plan. Maybe they're shorter term in the debt structure. There's a lot more hair and wrinkles associated with opportunities. Maybe it's a deeper value add opportunity. Those exact deals that were maybe bought in 21 and 22 are really deals that are struggling a lot right now, that are seeing problematic waters and times. So with Sam coming on board, this would be a really valuable way to buy better quality deals and not be as much of a pinch and have to kind of push for a certain return profile. When we've got Sam here, we can buy better deals. So I just really want to harp on that.
And the reason for that is because similar to what we've been working so hard for, which is building relationships with sophisticated investors, Sam has also done the exact same thing. So Sam has a long time network with his investors, and so those investors are more savvy, more sophisticated, and they're less likely to go and chase the shiny object or the deal that's projecting the highest return. They're looking at the deal more holistically and from a more sophisticated perspective. So that's just to add on to your point. That's how we solve for that goal. And also, I'll also add, just because I don't want to scare off any of our fund managers or potential fund managers, there's plenty of time to invest with us. We're not going to be solely retail for a very long time, so I recommend you get in now, partner with us, so that we can have a lifelong relationship.
And there's still very frothy deals right now that have that above a 15% return profile that we will continue to do. But over the course of time, we're going to be buying better and better quality deals. And another thing to mention is, we've said this so many times, and we'll say it again and again and again. We have no ambitions of having some massive company and then selling it. We want to be in this business indefinitely. As you mentioned today, 50 years from now, you want to have a child or two, hopefully have a child or two. Maybe Sam's kids will work at the company. We don't know where this world will take us, right? But we want to be doing one thing, be doing the same repetitive task again and again and again, if you will. But we want to have not the biggest company, but the smoothest company. And the smoothest company probably means having deals that don't have the riskier business plan, probably taking up more long-term debt that will survive any market cycle, but smooth deals that are easy to operate with good demographics and things of that nature. And I think Sam coming here just gets us to that goal that much quicker. Sam is a accelerator and a force multiplier. Sometimes 1 + 1 does not always equal 2. With Sam, I think it will equal a lot more, which is why we're so excited.
Same.
Yeah. Perfect. Yep. Thank you so much for listening. Craig, you want to intro us out?
Well, no, we've got a lot going on. So just a little call to actions here. If you're a capital allocator, if you're an LP investor, I know a lot of you guys watch this stuff, but you don't reach out to us. And I don't know why you don't, because I've said a zillion call to actions, and this will be a zillion one more. please email me if you're looking to raise for us. Maybe you're not ready yet, but you have ambitions to be a capital raiser. I will love to take the conversation. So email me. You know the email, but once more, it's Craig, C-R-A-I-G, at LSCRE.com. If you have any questions with regard to working with Lone Star Capital, any questions, maybe you've got someone who's a 1031 exchange coming up, maybe you got a friend who's looking to invest, send this content over to them. Now we've got someone who is market tested, so there's no reason why you shouldn't work with us at this point. It's truly foolish if you're not, in my humble opinion. So events coming up, obviously, RaiseFest, BEC, massive success. It was great seeing everyone in the industry. Hi, hello, if you saw us and you're watching this. We've got our Bay Area Summit event, the first ever West Coast Summit event coming up on April 25th. That's going to be awesome. That'll be in Menlo Park, California, our hometowns. I think Sam will be coming. I hope he's coming. We'll see. We've got a fun, pretty exclusive event coming up in Austin, Texas, actually. I don't want to say too much, but if you're a fund manager, capital allocator, raising, maybe you know about this, maybe you don't, but if you want to learn more about that, email me. You know the email. A little call to action there as well. And then, of course, we are hosting our flagship event, our summit, New York Summit, on September 15th, the day before Sam's birthday, on the 14th. Day after, yes, exactly. We'll have a pre-party that night, though. So we're excited to do that, probably cigars and such. We're actually going to change the format up this year.
Don't spill the beans too much.
Yeah, I'm not going to say too much. I'm not going to say too much. I'm not going to say too little, but I'm not going to say too much.
That's probably not true.
It's very exciting.
Never said too much.
Exactly. So we've got that event, September 15th. This could be the last. It could be many more, but you're going to want to go there, particularly if you are a operator, if you're a capital allocator. That is a marketplace to meet people. Don't take dollars out of your business's pocket or your pocket. Invest in your future and go to that conference. I truly think it's the best conference, humbly. That's all I have. Was that a good outro?
That's great.
Also, no. Wait, we are hiring. What are we hiring for?
We are hiring for an asset manager position. Frankly, we have so many applicants. We're not really looking for more, sorry. But we are currently in the market for the asset manager role and also for the accounting, what are we calling it? The accounting specialist role, I believe. So both of those positions will be in the New York office. So we invite you to find those job postings wherever they might be on Indeed, LinkedIn, Select Leaders, or just email Craig because he would love to talk to you if you're a potential accountant.
I would not. By the way, I'm going to give a shout out to this Diet Mountain Dew. It is absolutely delicious. Skip Bayless was onto something. He's a big Diet Dew guy. So that's all I have.